Drew, what you just said, and I hope everyone was listening to that, because that last minute or two was an incredible summary of, why the more you try to regulate housing, and again, everybody wants affordable housing, but how it has the direct reverse impact, where the fact is the more regulation you put on this, the more the private sector is saying, look, we're not going to build more. We're not going to invest more in the property. So it has the opposite effect of what's intended. And the answer to bring down costs, to your point, is more. You just need more housing of all types. And I know when Boston got rid of rent regulation, there was this concern that rents were just going to go through the roof, but it didn't.
Listen, everybody, we all know that real estate is the most proven way to build wealth. But why isn't everyone wealthy from real estate then? It's hard to know where to start, and most of the education out there is just complete trash, and you end up investing your money on a series of courses instead of in real estate. That's not how this podcast works. We give you the blueprint to successful real estate investing and bring on guests actually willing to share their secrets. I started my real estate investing journey as a freshman in college when I bought my first duplex and have been in the trenches doing deals ever since. And today, I now own hundreds of millions of dollars of investment property. On this podcast, you will learn what you actually need to know to be a successful active or passive real estate investor. And we'll offer our takes on what's happening today so you can navigate this market and build wealth. I'm Drew Breneman, and this is the Breneman Blueprint.
Welcome back to another episode of the Breneman Blueprint. Looking forward to today's episode. Have James Nelson, one of New York City's top investment sales brokers, with us today. Since 2018, he and his team, they've closed over $2.5 billion of deals, and he's been one of New York City's top brokers for a long time, so pumped to have him on and learn from him. He's also wrote a book called The Insider's Edge to Real Estate Investing, and he also has a podcast with the same title, so welcome.
Drew, so wonderful to be here, and what a great thing. You were kind enough to come on my podcast, and you have such an incredible story, and we've already gotten such rave reviews from that. So for your audience who have not heard your story yet, if you're going to check out one episode from my podcast, listen to Drew's story, because you've got an incredible one. So happy to be here and share with your audience.
Yeah, I appreciate that. And I've gotten quite a few messages or different people saying they saw that episode. So you've got a good active audience on your podcast for sure. So, but nice. Well, yeah, I think, why don't you, if you want to just kind of tell us how you got going in brokerage and just bring us current day.
Sure. So I went to Colgate, class of 98, senior spring. All my friends had investment banking jobs. I had no idea what I was going to do. I thought maybe I'd go out to the West Coast to make movies or something, until I realized that no one was going to pay me to do that. And I was $5,000 in credit card debt. So I went up to the Career Service Center looking for a job. And as luck would have it, there was an application due that day to go work for a real estate company in New York. I knew nothing about real estate. And believe me, today, for those of you who are listening who are maybe entering the job market, you all are a lot more prepared, certainly, than I was, certainly if you're listening to this show. But look, I got an opportunity. One of the co-founders of the company of Massey Knackle was a Colgate grad. They gave me a shot. Although they joked afterwards that there was only 2 people who applied for the job and I was their second choice. So, we still like to laugh about that. But, over time, I stuck with them for 17 years, was a partner. We sold the company to Cushman and Wakefield, which was a great thing. Had 3 great years at Cushman. And then a little over 5 years ago, received an opportunity to build out the investment sale platform here at Avison Young. We're a global full service company with 120 offices around the world. But my group here in New York City focuses on investment sales, selling all asset classes, multifamily, retail, office, land, development. So that's my story on the brokerage side, and we can certainly get into what I've been doing on the investing side as well as we get into the conversation.
Yeah, I want to hear about that. I think on the brokerage side, I'd be interested. It's interesting that you're not specializing just in one product type. So then how do you, I'd say, what's your edge? How do you compete with the brokers that, let's say, they only do office in New York? And if you guys are doing different product types, do you have specialists on your team, or how do you work that?
So as a broker, there's a couple different ways that you can approach the market, because you can't do it all, right? So the company that I started with, Massey Knackle, had a territory system where we took New York City and we divided it up into 50 territories, and you had a broker in every neighborhood, and their job was to know that area and then handle the sales, which were any asset classes that were in that area, right? So you can do this from a geography standpoint. Then, as you mentioned, there's asset specialization where you can say, okay, I'm going to just do multifamily sales. I'm just going to do retail, triple net, office, development. There's also ways that you can just cover by clients, right? That's how a lot of mortgage brokers go about the business, is they really follow what their clients are doing. So I certainly grew up in the territory system. There's benefits certainly from covering a market that way if you want market share. But what I've found is that the asset classes have become so specialized, right? So if you're a multifamily investor today, it's very, to understand the ins and outs, and I know you're very active, throughout the country. So you can appreciate this, knowing that owning multifamily could be very different, say in Chicago as it is in Florida, right? So, we have a multifamily team that we've built here that knows all the ins and outs of how to operate and succeed here in New York, investing in multifamily. And then we've got a separate retail group, office, and development. So that's how we've chosen to cover the market here.
Interesting. Yeah. And I think, Bob Knackel, he's been really active on social media. I don't know if he just started in the last 3 months or if he just finally hit all the algorithms for me on LinkedIn, at least Twitter, where every time I go on the platform, I see he's posting something. And yeah, it seemed like, that was the number one company in New York, or, that was like a legendary run where he is.
Yeah. So I started my career with Massey Knackel. So I started working as Bob's associate 25 years ago, and, he's the master, and I learned so much from him. And even today, he remains a mentor of mine. And, Bob always said that we were in the information business as opposed to the sales business. So the important thing, and for your audience, whether you're looking to broker, whether you're looking to invest, is become an expert. I think, Drew, what makes you so successful is you've really focused in on what your expertise is. It's not, multifamily even unto itself is a very broad category. So what types of assets do you like to invest in? How do you approach them? So I think that's super important. And I think social media today is just a great way to deliver content and value. And I think, even, this show, getting out information out there, hopefully this is going to inspire a lot of people to step up their game and invest.
Yeah, definitely. What are anything that's come to mind as like the big things that you learned from Bob? I'm sure there's so many, but any that are worth sharing with the audience?
Well, certainly that specialization and that expertise. So when I started in the business, even a year and a half, 2 years in, when it was time for me to go out on my own and take over my own territory, before I could pick up the phone, I had to study the Chelsea neighborhood in Manhattan for 3 months, get to know everything about the area, everything to know about all the sales that had taken place, retail rents. And when I went to start meeting with owners to see if they'd have interest in our selling the properties for them, when I was competing with more senior veteran brokers who had a lot more experience than I did, but I could run circles around them when it came to neighborhood expertise. And that was super helpful to me in my career. So I think specialization is really important, but also hard work. Like, this is a business where, you got to put in the hours. And so we were always, early on the desk, 7 a.m., getting work done out of the way. So 9 o'clock comes around, we could hit the phones.
Yeah, that's so interesting you say that. I was just in Phoenix this week, and one of the brokers I was talking to, who's the top multifamily investment sales guy, like in his size of the market, and he was talking about how he drove the market. He saw every building, just so similar to you. I'm sure at that, you're specializing in Chelsea. You meet with that owner, and you'll know every owner on the block. And he learned every property in his sector kind of the same way. And I asked when he drove the market, and he said from 5 to 8. And I was like, and I asked, well, AM or PM? And he said, well, AM, you don't want to be missing your time where you can be calling owners. And because he would be at his desk then by 8:30, and then call till 5 or 6 or whatever time made sense to call to. But he would never interrupt that block of time. If you need to drive the market, he was doing that on the weekends or in the early morning. And I asked how many brokers in the office did that, and he said none. And so it was interesting where it was like, well, yeah, no kidding, you guys all became successful, where if you're know every owner and putting in that kind of time finding the information, like, it's no surprise how you and your team have been able to be so successful then, James. So
that's right.
That's interesting. And so then, what have you been doing then on the investment side?
Well, look, since last June, things have become very challenging for, pretty much everyone, regardless of market. And, for first post-COVID, and we were finally recovering and getting things rolling again. And then rates start going up last June. And not only has that put downward pressure on pricing, obviously more expensive to borrow money, but it's also, I think, put a lot of buyers on the sidelines. A lot of buyers have said, look, I'm not going to jump in now. I'm going to wait 6 months. I'm going to wait a year. There's going to be better opportunities. There's going to be more distress. And so what's happened is sales volume has gone down dramatically. In New York City, Manhattan, dollar volume dropped 70% in the first quarter compared to the trailing 4. And building sales, the numbers were only off by a third. So we're still getting some deals closed, but it's just a lot more challenging because, again, buyers are very selective, and I think a lot of them are missing out on opportunities. I mean, Drew, I know you're out there looking for opportunities day in and day out, and sure, everybody wants to time the market, but there's great opportunities out there now. And one of the things I talk about in my book, which is one of the most important things to look for a great opportunity, is seller's motivation. And there are owners who need to sell regardless of what's going on in the market. And sure, it could be distress, loan coming due, have to do something, but it could also be an estate sale, partnership dispute. And I think the buyers who are out there who are being proactive and looking for opportunities are finding some great buys. I think this next year or two, you're going to see some of the greatest opportunities you've ever seen. So this is a great time to be tuning in and thinking about your next investment.
Yeah, actually, I did a podcast that said a solo one that basically said just that, where you've been on the sidelines, or the brokers were too busy to call you back as a new buyer. The last 2-3 years. Well, guess what? Like, they got you'll have a good shot at getting your deal now. And you're supposed to buy when there's blood in the streets, and we're not quite at that point, but that's we're getting there. But yeah, then what? In the markets we're in, with the transaction volume's down a similar amount, and one thing that I'm finding kind of, I don't know, interesting about the time is, since there's so few deals on the market that are actually able to, hit any sort of buyer expectation price-wise, it's like the few distressed deals where people do need to sell or will meet the market and take a loss on their property if they bought in the last year or two, like they still get, to me, like, aggressive pricing when we underwrite it. Like, I haven't seen anything where it's like, well, they're just giving that away and you can make like a 15-20% a year on it. Because then what have you saw in New York then? Because I'd say they're just, velocity has slowed so much in the Texas and in Phoenix where we are, that the prices haven't they've gone down, obviously, but then when you apply the new interest rate and how much money you need to put down with today's capital markets, like, it's not, the returns aren't screaming like they were in 2010 when I was buying stuff, at least not yet.
Yeah, no, it's a really interesting perspective, because if you don't have as much deal flow and there's still a lot of capital that people want to put to work, and yeah, part of it, it's not just that it's more expensive to borrow money today, but you're getting less leverage, which is the point that you were making. Especially all these regional banks who are now under pressure, right? They're not going to stick their neck out, right? So that means, yeah, you got to bring more equity to the table, and equity is still more expensive than debt in most cases. So, but as far as New York, I mean, New York's an interesting market because, and having done this now for 25 years, I mean, what you're doing nationally, I mean, it wouldn't surprise me if you told me the most important metric that you look for when you invest is a cash-on-cash return. Like, you truly are solving for cash flow. New York has always been so much about, the hockey stick where, you're getting in, maybe it's a break-even proposition, but it's heavy value add, and you make your money on the sell, which is really tough now, because who can project where cap rates are going to be in a couple of years from now? We hope that rates flatten out, and, great to hear that the Fed didn't, increase rates again this week, although they're still signaling that there might be another 50 bips out there before the end of the year. But still, I mean, I think that the way you make money here in New York is that value add and improving to the bottom line. And I would suggest probably anywhere in the country. I mean, for you listeners out there who are right now thinking about, hey, the only way this deal pencils is if I can sell at a 4.5 cap on the exit, I'd probably tell you maybe take another look at the opportunity, because really the way that you add value is adding to that bottom line. And where we are having success, I mean, first of all, residential rents here, and I read an article in the Wall Street Journal this morning talking about how nationally some of the rents are starting to cool off because they increased at such a dramatic rate, and now you do have a lot more supply coming into certain markets. So that's important to study the market and understand that. But here in New York City, we have a housing crisis. We have such a shortage. A lot of our units ended up in rent regulation, where those units are not freeing up, and so you have so much pressure on these remaining million or so units that exist that are fair market, and we don't even have new development happening now because we lost our tax abatement. So, like, in this strange way, we've seen our residential rents continue to increase at a dramatic rate, and so that's at least a positive if you're an investor. Maybe not if you're a renter, but look, I see the opportunities right now. I love mixed use. I love retail. Retail is having a huge resurgence. And we see, especially here, High Street, New York, we're talking Soho, Fifth Avenue, Madison Avenue. Post-COVID, some of the rents were 20 cents on the dollar. And then all of a sudden, people are back. We're expecting 61 million visitors next year. They're shopping. And we're seeing huge upticks in retail rent. So I think that's also a really smart investment. If you can find a situation where maybe it was a post-COVID deal on the retail, but it's got a short-term arrangement, you can go in there, look for a pop, and again, add value to that bottom line.
Yeah, I totally agree with that. It's this business, if you want to make it as simple as possible, and you're an investor, you need to create value on your deals. It's as simple as that. All the deals that we've done the best on, it was always how the ones we could move the NOI the most on. It's just as crazy. It's as simple as that, where we're never banking on, okay, we're just going to buy it and then interest rates will drop or the market rents will grow. We're the ones growing the rents with our business plan. So totally agree with you. And yeah, you can do that with any product type. Normally I'm always talking about multifamily, but 10, 15 years ago, I was doing a lot of commercial deals, and yeah, those retail deal or any product type where you can go in and the rents are under market and buy it at a fair cap rate today, pop the rents to market. I mean, that's creating the value. That's what James is talking about. And that's definitely how you make money in this business. And if I'm talking to somebody who's, newer, or they bought a deal and they're wondering why it didn't go up that much, that's always the conversation I have. It's you need to create the value. It's great. Maybe you bought it at what was a good cap rate compared to other deals if it was stabilized, but if there's nothing you can do to it, you're just going to get the market return and for appreciation in some of these markets. I've invested in Chicago for a long time, and probably New York's been the same the last 5 years, but it's gone up and down, but it's basically been flat. Chicago, I would say appreciation's been pretty much next to zero since 2015 through 2023 on most product types, but we've crushed it on all of our deals because we are the ones adding the value. So that makes sense completely, James. I actually thought you were going to say that New York was maybe holding up a little better than that, because in Chicago, prices have pretty much on the multifamily side not dropped much at all due to interest rates. I should say that differently. The rents have gone up so much the last 2 years with people returning to the city, and similar thing. There's almost no new supply except in one neighborhood where there's a bunch, but in all the other neighborhoods, there's almost none. And then rents have gone up 5 to 10% a year the last 2 years, depending on where it is. And that's offset the value drop from the interest rate pop. So somehow Chicago is just done great the last year and a half. So
yeah, well, I mean, it's Chicago and New York, they've been the contrarian markets because, look, I mean, there's no challenge or no secret that our markets are heavily regulated. There is that fear. I mean, the politicians have on the far left been proposing basically universal rent control here in New York. It hasn't passed. It's we hope it's not going to pass because then a lot of the investor operators who've already left our market for pro-business states, we want them to stay here. We want them to continue to invest in the multifamily stock here and build new ones. But no, we've actually, so our cap rates actually jumped up dramatically in 2019 before rates went up. We used to be a 3.5 cap market. We went up to a 5 cap market before rates began to go up. Why? Because in 2019, there was a huge new, it used to be here in New York that you could take a rent stabilized apartment and you could decontrol it. If the tenant left, you could do a certain amount of work and you could charge a fair market rent. In 2019, they got rid of it. They said, once stabilized, always stabilized. Well, what did investors say? Hey, if I can't take my building from a 3.5 to a 5% return because you're going to cap what I can raise my rent, I'm going to ask for that 5 cap day one. So then rates start going up. Now we're seeing 5.5 cap, 6 cap. So you can actually get positive leverage on our deals here because our caps are have increased. Whereas, look, I know these Southeast markets, and I'm sure a lot of your listeners are, buying in those markets. And look, I get it. Pro business, you got people moving there. But if you bought at a 3.5 cap, and now you got to turn around and borrow at 5.5, you're going to have some challenges.
For sure. And I think all the Sunbelt deals that I saw are definitely everything that we bought. It was maybe you're going in at a 4 cap or a 3 something cap rate, but they're all stabilizing north of a 5 cap once you mark the rents to market. So there's so much loss to lease in those markets, at least, to capture. But that's interesting. You think then on the rent controlled deals in New York, are you able to grow the rents at least in line with expenses? Because I know that was something I heard some chatter about where it was like, yeah, we like your NOI, some people were underwriting where it's got to be, it's going down, but I might have been not hearing that right, where they were.
Yeah, we have a rent guidelines board, and every year they debate what type of increases they're going to get. And it's, as you can imagine, a highly publicized and political event. And, look, the tenant rights groups want the rent to be frozen, despite the fact that, to your point, increases on operating expenses, taxes, again, landlords have not kept up over the last couple of years with these increases, which are typically, 2-3%. So that is a risk where if you buy into rent regulated product, that you are at the city's mercy on what type of increases every year. But look, we still, like I said, have fair market units where you can increase them at a market rent. And there's been a lot of, like I said, a lot of pressure to try to regulate those, but it hasn't happened yet. So thankfully, there's still some kind of equilibrium out there to say that you just can't have landlords here completely subsidize affordable housing. In fact, what's interesting, Drew, is there's a lawsuit that's found its way to federal court because, look, this is not just a New York or a Chicago thing. I mean, LA has universal rent regulation now, Portland. And the question is this a taking? Can government actually put restrictions on the private sector saying, okay, we're going to make you regulate your rents to provide affordable housing? So you are shifting the responsibility of affordable housing onto the private sector without due compensation, which is a pretty compelling argument, right? So look, I'm all for, we need affordable housing for sure. But there needs to be incentives, and I believe really a public-private partnership to make that happen. You can't just, put that on the private sector without due compensation and say, okay, you now have to make this all affordable. So again, we could spend a whole hour on this, probably not. I mean, I don't know if that's helpful to your audience or not, but I think if you take anything from this, you do have to understand the political landscape and, what are the considerations for that before you dive into a market.
Yeah, the whole rent control thing is very interesting to me from almost a different lens too, where all the politicians, it's well-intentioned, they want to have affordable housing, rents, and so many of these cities are very high for what people make on just your average person. But what's crazy to me, and anyone who took Econ 101, is actually the way to make the most affordable housing is have some sort of program where you'd incentivize building, have more supply, then prices will go down or not go up as fast. And like that, people sound like, oh, well, that sounds great for you as a real estate investor, more buildings. it's actually better to have less buildings. I buy them. So if there's less of them, that means they're worth more. So it actually would be worse for me if there was more building. The people who benefit the most from rent control, besides the tenant who can hang on to a unit super cheap for 50 years, is the few that actually own the decontrolled or non-rent control buildings in these cities. If you own a building in New York or LA that doesn't have rent control, you're benefiting from the fact that whatever, I don't know the percentage, but a huge percentage of the units are not available to your new renter. They're basically offline and don't exist from a rental standpoint because someone who's paying $800 from 1988 is still in there. So like that actually, so it's interesting to see from that lens, because the politicians, they have good intentions with this, and they actually get the exact outcome and in the reverse. They're getting the opposite of what they want, and then you can never renovate these buildings. So then the plumbing and electric is in horrible condition, because if you can't move people out, you obviously can't turn the power or water off. So then they don't ever get improved. Where as Phoenix, Texas, Chicago doesn't have rent control. So Chicago, Florida, they don't have any of these like super old buildings that need that are in disrepair, if they're in a nice area, because someone will buy them and vacate the building and then renovate it and then put it back on the market. So it's just interesting how you get the exact opposite. You get worse housing and higher prices, trying to help out everybody.
Drew, what you just said, and I hope everyone was listening to that, because that last minute or two was an incredible summary of why the more you try to regulate housing, and again, everybody wants affordable housing, but how it has the direct reverse impact, where the fact is the more regulation you put on this, the more the private sector is saying, look, we're not going to build more, we're not going to invest more in the property. So it has the opposite effect of what's intended. And the answer to bring down costs, to your point, is more. You just need more housing of all types. And I know when Boston got rid of rent regulation, there was this concern that rents were just going to go through the roof, but it didn't, because rents across the board smoothed out. It encouraged more developers to bring more product online. So again, we could spend a whole show talking about this, but I wish the elected officials heard what you just had to say, because it's really at the core of the matter.
I'll put it online for them all to enjoy. But then let's talk about your book. I mean, there's a lot of good insights in there. I think a lot of people, maybe they know about real estate investing, they've read a book or went to school, had some real estate classes, but then once you get out in the real world, you don't really know how do you handle some of these interactions? How do you set yourself apart? What do you really do? So I like you have some great points around that stuff in your book. So why don't you walk us through some of the tips in that, if you'd like, or however you want to talk about it.
Sure. So Drew, I really appreciate what you had to say about the book, because I've been doing this for 25 years and I've always been asked the question, James, what's the book? How do I learn how to do this? Clients, maybe they have a son or daughter looking to get into the business. And this is kind of a business where you learn by doing, and there's not a lot of guidebooks along the way. And sure, there's a lot of books out there on how to kind of get in the game, kind of fix it, flip it, Rich Dad, Poor Dad, house hacking. I mean, look, that's all a great way to start off, but if you want to take your business to the next level, like you have, Drew, and do more serious investing, 10 units, 100 units, understanding how you actually do it, a practical how-to guide, that's what I wanted to put in the book. So anyone, whether you've been doing this for 20 years or 2 days, you can read this book and it's going to show you exactly what to do, right? And so, I've been on a speaking tour with this book, and I've spoken at some of the top real estate programs out there, and the master's students, and so smart. They understand the numbers, how to underwrite the theory, but then I'll talk to them after and I'll ask them a question. Okay, great. How do you do it? How do you buy a property? How do you find it? And you get this frozen look on their face where, well, hey, I'm just the numbers guy. I'm going to go run numbers, and I'm going to be the analyst, and I'm going to join a big company, and they're going to have an acquisitions department. So I'll let them worry about how to find the properties. And the point is, look, regardless of where you fit into the transaction, if you're a broker, you're an investor, you're a lender, you're the analyst, you're the acquisitions person, you have to have an understanding of how the whole thing works, right? And so my book really lays it out from start to finish. Okay, These are the different ways you can get involved in real estate investing. These are the different asset classes. You can either be a general partner, you can be a limited partner. These are the people that are involved in the transaction. And what I've learned throughout my career is it's the people involved who make a deal successful. My first podcast interview ever I had with Bruce Ratner, prolific developer. He's built over 50 projects in New York, built Atlantic Yards, part owner of the Brooklyn Nets. And I asked him, I said, how did you do it? What was your secret to the success? He said, James, it was all about the people. I had the right specialists who had that knowledge, right? And that's so important today. So this book tells you, how to get involved, who are the players, and then actually how to source opportunities. How do you actually find great deals? There's a whole part in there about how you work with brokers. If you listen to my friend Bo Berry, he wrote a book called Multifamily Investors Who Dominate. In his market in Florida, he tracks that 93% of deals are sold through brokers. Okay. So if brokers are handling the majority of deal flow, probably a good idea to know how to cultivate relationships with brokers and how to get great deals from them. And it still amazes me. I would say 95% of my calls are outgoing, meaning I'm calling investors saying, hey, I got this great opportunity. Do you want to buy it? And you might say, well, James, that's your job. You're a real estate broker. You have a property to sell. Of course, you're supposed to reach out. But Drew, and I'm sure you do this, the really good investors, they don't sit around and wait for the phone call, right? They're calling the broker saying, hey, what's going on? Do you have anything else in the pipeline? What else do you have? I see what you have online, but there's probably some better stuff out there. Hear of anything off market? Or they're saying, hey, let's sit down for a cup of coffee. Let's really get to know each other. And I think things like that, cultivating those relationships to get great deal flow, right? You want to be top of mind, right? And then what to look for in a great opportunity. Not just, we talked a little bit about seller's motivation, but what are signs on how you can reposition a property? How can you really maximize value? So it really goes step by step to really give you practical, we call it the insider's edge, right? This is a business where you can gain the edge by, a lot of these steps to outperform the competition.
I think that's great advice. And this is a real life example. I said I was in Phoenix this week. We were doing what you were saying. Like we haven't seen a lot of these brokers in quite a while, just with how slow the market's been. So we were there for 3 days. First day was we were looking at the deals we were rehabbing, and then got drinks with a broker, dinner with a buddy. Then next day was breakfast with a broker, coffee with a broker, lunch, just literally every time slot where we wanted to, all these folks where we haven't toured a deal in a long time, where it was, lunch, then get a coffee, then office meeting, drinks, dinner, where even when we were getting the drinks, where it's like, should we eat? Like, no, we gotta go to dinner after this. Like we had to pack it all in just a couple days. But that's really important because you actually get to know them. I mean, these are real people, not just real people who want feedback on their deals. I'm sure it's all, these are how to work with the brokers is really important, where I see one mistake I see all the time is people where they get sent a deal, it's not a fit, and they don't tell the broker why. They just don't call them back. You do get so many calls and inbound things. That's why they do it. I'm sure if no one's ever told you that, James, or you're getting flooded with stuff. But then if it's a broker sending you a deal, you should tell them why you don't like it. Then they can refine what they're sending you. That's always like one thing that I'm telling everybody. So yeah, I think that's
great points. Yep.
That's great advice. I think, what should a buyer be doing then? Let's say they want to see either off-market deals or be sort of top of mind with a broker. What would be some things you'd recommend they do? I mean, obviously we got to read The Insider's Edge, and then what else we got? What else we got to do?
Well, especially if you're new to the business, right? Or you're breaking into a new market. And Drew, we actually talked about this when you came on my show, which is it can be tough to be the outsider, because a lot of these brokers, right, I don't want to say they want to make their job easy, but they want the highest degree to execute, highest degree of certainty, right? So they've got their stable of buyers who have performed over the years, probably round-tripped on a couple deals where, hey, I sold you this deal, and then 5 years later, you gave me the deal to resell. So to kind of break in, that can be challenging, right? Because the brokers are saying, okay, I don't know you yet. You haven't proven yourself. Are you going to perform, right? Now, today, when the market is a lot tougher, right? And you made the point, a lot of these long-term investors are on the sidelines. So that helps when a lot of the competition has been weeded out, but you still have to demonstrate that you have the capability. My advice to you all listening is don't oversell yourself. Don't come in like, if this is your first investment, don't try to pretend like you've been doing this 20 years, but you might want to think about getting a good partner who does have that track record, because track record is really important, right? When you're going to buy the deal, that they know that you can perform. So you really have to show and demonstrate that you have the ability to transact either on your own or with a broker. Make sure that they know that you're coming in with reasonable underwriting and you've got your financing lined up, because that's really key. And then just, again, cultivating those relationships. I mean, we were just talking about that, but going out and having coffee, getting to know that broker on another level than just a transactional level, like finding out, what things do you have in common, like really building those relationships. And then I think also thinking about your relationship with your broker is a two-way street. Just don't think I'm going to sit here and, again, wait for opportunities to be presented. Maybe you see deals in the market that are off market and maybe they're not for you, but you call the broker and say, hey, just to let you know, I looked at this deal. It's not for me, but you might want to call the owner. Maybe they're interested in finding a broker. Maybe it's a listing for you. Okay. Now, wow, that broker's thinking this buyer went out of their way to try to help me, right? I'm going to return the favors. So think of it in that light as well.
Yeah, that's great advice. So is there anything you see people who then, and I really like the don't oversell your stuff, because that's something that I'd never realized I was doing that. I never oversold myself. And I didn't really realize how that was helping me till someone was explaining what they were doing, and it was so much of a black box, kind of confusing. Where's their equity coming from? What are they even doing? And it was kind of funny where I was like, this is so confusing. This would be hard to work with, where for me, I always just tell people like exactly what I'm doing. It's a pretty open book. And then, then they know what they're getting. So they're not like, they could at least understand like, well, he's going to get the money from this and here's his lender and his plan. Where some of these folks, you ask them that and you can't follow who their lender is, where the down payment's coming from, what they're going to do with the property, how they got to the price. Like they can't explain anything. So you want to be able to explain all those things like James is saying, and you don't need to oversell it. If you've never done a deal before, it will help for everything, convincing the broker, getting your loan approved, everything, to have a partner who's done it before. And that's the same thing I say, because I talked to somebody that wanted to get into from like the mortgage broker side to being a principal, and it was my advice on how to do it was one word on your first deal: you got a partner to get into like bigger stuff if you're going from scratch like he was.
Drew, I also want to share another great piece of advice you had from our show, because when I asked you how you went into other markets, you said that you utilized the brokerage network. So the brokers who you had transacted with in Chicago, now again, this only works with a national firm, but they were then able to vouch for you when you were buying in a new market. And that's a great way to do it as well, where you can kind of get that warm introduction where this is someone who has a proven track record.
Right. And I made it a point to ask if they, I'd ask, let's say the broker, and this was for Phoenix, do you know this person in Chicago? They'd say yes. I'd say then ask, if you'd like, about how we've worked in Chicago then to that person. And a lot of times they knew the person in Chicago really well, because, from going on awards trips or different conferences the companies had. So they actually, like, yeah, I was just at the Four Seasons in Mexico on the big producers trip or whatever with him. I know. And then you can get that. It wasn't actually, I had done I guess it wasn't a warm intro. That would have maybe been smarter. I was more around the time we were offering on deals, and it was sort of like, if you've never met us other than just walking to the property a few times, like ask this guy how we've done, and we've bought 5 deals with him. And so yeah, definitely that helped a lot. And then to get the first relationships going, it was just don't oversell what you're doing and then perform. So don't be retrading over ticky-tack stuff. It drives everybody crazy.
Absolutely. So, good.
I've been a seller in Chicago on a few deals, and these people are wearing me out with all their little little asked to see why everyone was sending us to their deals, because we never do that. So
Yeah.
Great. Well, yeah, I think that's perfect. Let's leave it there. James, how do people get in touch with you? They wanna follow you, hear more about what you're doing.
That's awesome, Drew. Thank you. So jamesnelson.com is where you can find out about my podcast, video series, the book, white papers. And it's really, I built the website for the investor, right? So it's how can I help you become successful, help you gain the insider's edge to real estate investing. You can also connect with me at James Nelson NYC. Pretty active on LinkedIn, Instagram. Need to do more on Twitter. We were talking about before about some of these groups out there. I know a lot of investors out there raising a lot of money on Twitter. So I'm sure you'll see me there in a more meaningful way soon. But this was really awesome, Drew. I appreciate the opportunity. Hope this was really helpful to your audience. And I think that the last thing I would say to everybody, and this is from one of my mentors, Rod Santamassimo, who wrote a book called Knowing Isn't Doing. So hopefully you were taking notes during this, because, a lot of value here. But, again, don't let that knowledge just stay in your head. Like, really put these into practice, because knowing isn't doing. So thanks again, Drew, for having me.
Yeah, I appreciate you being on, James. This was a great episode, and that's, great closing advice. The people that you see that are successful doing what you want to do, usually they're not, they didn't go to Harvard for undergrad and an MBA or whatever. Their family was in it. It's usually they knew a lot of the same stuff you did, and they took a risk and went for it, and then they did it. So, perfectly. Yeah, thanks for being on.
Awesome. Thanks again.
If you learned something from today's show, leave a review and hit that subscribe button wherever you enjoy your podcast. Dive deeper into real estate investing on Breneman Capital's website, breneman.com, where we have numerous free resources and information that can help both active and passive real estate investors. Accredited investors can get started today as a passive investor in our multifamily investment opportunities by hitting the Invest Now button on our website.
The views and opinions expressed in this podcast are those of Drew Breneman and guests as of the date of recording, and do not purport to reflect the views or opinions of Breneman Capital LLC and its subsidiaries. Views and opinions are provided for informational purposes only and should not be relied upon or deemed as investment or tax advice or an offer to buy or sell securities. The speaker cannot be held responsible for any direct or incidental loss incurred by applying any of the information offered.